Hello everyone, this is Sebastian McMahon from IA Financial Group. I'm back with another weekly economic review, this time for the week ending January 21st, 2022. So lots of volatility on the markets this week. Many interesting stories going on, looking at central banks coming up next week. So many competing stories. So let's look at all of this and what it means for your portfolio right now. All right, so a lot of red on the screen. If you look at the year-to-date components on the right, you see that we are down 3.3% already for the broad bond index in Canada, the universe index, minus 6.3 for the long index. And when you look at equities, Nasdaq down about 10%. US, the S&P 500 down about 6%. The bright spots are emerging markets, and Canada, we're doing better than in the US, so better in the downside. So this goes pretty much in the side in the direction of the views that we shared recently, the positioning that we have in our funds, more value, less growth, global ex-US versus the US. A tilt towards Canada, a tilt towards emerging markets, underweight bonds. So these are in line with the positioning that we have right now. So we're happy with that. Canadian dollar higher on the year, up 1%. The price of oil already up 15% on the year. So a lot of action already after only 3 short weeks. So last week I mentioned that in the US we would see over the next few weeks the resolve of the politicians or how we're going to be facing Omicron. There was very little appetite to go with new lockdowns. And again, this week, this is what we heard. So there seems that there's no appetite to go there. The state governors in many states have diverted resources to support the effort versus Omicron, but they're not going with lockdowns. But when you look at the economic data, where here you have the mobility data on the left, it's the mobility index from Google. So no surprise to anyone, but when you use your phone, the GPS on your phone to go from point A to point B, well, it tracks you. And they have indices here of how much time you spend at home, at work, at the retail, and as you can see on the left, it's going down. So people are moving less, buying less stuff. So an economic impact there. On the right is the TSA checkpoint traveler throughput. So it's the traffic at airports. Usually at the end of the years, you have a slowdown. So those are the purple circles that you see there. And this year it's a bit worse than previous years. So a lot of mobility has been taken out here because of Omicron, so there should be an impact in Q1, but no measures per se for now, so that's the good news. Canadian inflation, so we've discussed inflation, ad nauseum over the last few months. The good news is that we seem to be in a peaking pattern here. Will the peak be in because this was for December, we had 4.8% inflation in December. Was that the peak? Will it be next month, the month after? It's hard to tell, but we are in a peaking process. Consensus is that we'll end the year lower, so is lower between 2 and 3% or between 3 and 4%. It's still early to tell, but we should be ending the year lower. Here in the chart, you have the inflation in goods, the blue line, and in services, the gray line. So two stories here. Inflation in services is accelerating, but still it's not worse than it was in 2018. So it's not yet alarming. Goods inflation is much higher at 6.8%, but it seems to be peaking. So let's see where we end up over the next few months, but we could be close to the peak here. So financial markets, that's where the real story is this week. So next week we have central banks decisions. We have the Bank of Canada and the Fed. It's rare, but it happens. We have the decision from both the same day, Wednesday, January 26th at 10 a.m. Eastern, we'll have the decision from the Bank of Canada, and at 2 p.m. Eastern, we'll have the decision from the Fed. So now the question is, are hikes coming as soon as next week? So I would agree that the debate is warranted in Canada. Could we have a rate hike next week? Personally, I still think that it won't be next week. It's going to be probably in March, because when you look at the Bank of Canada's guidance recently, they've been pointing towards conditions being right for a first rate hike in the middle quarters of the year. So that means Q2 or Q3. So if you're aggressive, well, Q2 starts in April. So April is pretty much the the sweet spot, the expectations from the markets. Well, at least it was. Now it's starting to get closer to today. Expectations, you have a decision in January, you have one in March, and then one in April. And the consensus is shifting that, well, inflation being so strong, the labor market being so healthy, also some concerns about housing, mean that the Bank of Canada should start hiking earlier than that. So is it next week? I say it's possible, but unlikely. I would give odds of about 20 to 30% of a first rate hike next week. But we are hearing a lot of people, a lot of Canadian banks, the economists there, starting to position themselves as saying that they should hike next week. So it's not the consensus yet, but it's getting close to be the consensus. So my expectations are more that, well, over the next few years, we're going to have many rate hikes. Make no mistake, we're going to probably have 4 hikes in 2022, maybe 4 hikes again in 2023. So if you have important financial decisions to make, rate hikes are coming. So you've been forewarned. There's no sense in having such low rates right now, so much monetary accommodation when the economy is doing so well. So this is coming. But probably if the Bank of Canada wants to keep its credibility intact, since the guidance has been strong for a while, should probably use next week's meeting to tweak expectations, to recognize that the time is ripe for rate hikes and opening the door for a rate hike in March. That would be what I think would make more sense. But again, it's all about the odds. So we could have a hike next week, and I would not be falling out of my chair. So, but it's not my expectations. Federal Reserve, it's another story. There's been some questioning. Should they hike next week? It's probably pretty much everyone agrees that it would be too early. March is more likely because remember that in the States, the Fed is still buying bonds, so quantitative easing, to keep interest rates low, to keep the economy afloat. And this should end in March. So it would be funny for them to start hiking now while they're still doing quantitative easing. So probably that leads us to March. So next week we might have a rate hike from Canada. It's not my base case scenario. It's March, but the Fed probably is going to be March anyway. So maybe March will have hikes from both central banks. So interesting juncture here. So the prospects for less liquidity in the markets, again, it's coming. And in the Fed, we'll have also 3 to 4 hikes per year in 2022, 2023. So market is seeing that. So that's what's having an important impact on the markets right now. So the hot themes of 2020, 2021, clearly losing steam. So here you have a few trades here, a few strategies on the chart. So those are 12-month percentage returns. So the blue line is the S&P 500. So very positive returns, but I mean not exponential like the other strategies. Then you have some of the hottest strategies of 2020, 2021. So the retail favorites, think AMC, think GameSpot. So the Reddit crowd. So that was a strategy that was very strong at some point, completely deflating now. Renaissance IPO index, so the new stocks the new companies that are coming to the stock market, that was a hot trade, deflating. Non-profitable tech, that was a hot trade, deflating, and the most shorted stocks, the same thing. So the rotation to value has begun. It likely has legs. So again, less liquidity that is expected is changing the behavior and changing what investors are looking for in the stock market. So what that means is that value over growth already started. Here it's a ratio of growth to value on the S&P 500. So growth had been outperforming value. Now it's starting to reverse. So that means emerging markets. That means Canada. That means financials. That means energy. That means Europe. So all of these trades, the strong rotation from tech to cyclicals is undergoing. That means it's a big headwind for technology. So on the left, you have the Nasdaq, and for the technicians out there, we broke through the 200-day moving average, so broke below, so an important support that has been broken. On the right, when you look at the net allocation, so long versus short on technology, that's the lowest exposure to tech since December of 2008 for institutional managers. So that's quite a shift of views on tech. And what that means is that Nasdaq is now in correction territory. So There might be still some air in the balloon, so you never know. Corrections are normal. Corrections are a good thing. It just balances things out in the market. Will we have a correction on the S&P 500 and the market at large? Maybe, when no one has any idea, but now we're really starting to see this shift. Interest rates rising. It's causing some waves in the market. So it's going to be interesting over the next few weeks, and we'll be here to discuss that with you every single week. So we'll keep you posted on our views and what's going on in the markets. So next week, Bank of Canada rate decision. Again, consensus is that we won't have a change, but as a consensus for now, it's changing every single day. So maybe next week the consensus will be that we'll have a hike. We'll see. Still think it's unlikely, but probable. In the US, we have the rate decision, personal spending, personal income, and the sentiment index from the Michigan University. So which is quite low right now. So confidence is low in the US. So that wraps it up for the week. ia.ca/economy. Economy and Finance 101 will be adding some content in 2022. No worries there. On social media now, we're just doing some publicity for the one on emerging markets and emerging countries. So you can watch that if you haven't done so already. You can follow me on Twitter and on LinkedIn, and on LinkedIn you'll be able to find the PDF copy of this presentation. So thank you everyone, and we'll be back again next week with more information on what's going on in the markets and the economy for you. Thank you.